Hi everybody, hey, welcome back to the show. In this show, I'm going to be talking about an easy trick that you can implement right now to simplify your TTM squeeze effectiveness. So the squeeze, what is it really quickly? The squeeze is a volatility measure. It's letting us know when the stock is about to consolidate, but more importantly, when it's setting up for its next big move. That's what we need to know about it, and it's represented by these dots. And if you have the Squeeze Pro, you know the black dot, the orange dot, and the red dot. Okay, so what we're also going to be using for this is this Forecast Pro. Now, this is my indicator, but really quickly, if you go up to Studies and Edit, this is on Thinkorswim, you can search for the Market Forecast. I've studied the Market Forecast indicator for over 15 years, and it's got trading signals built into it. So what I've done is I've actually taken those trading signals, we've programmed them into this, and we call it the Market Forecast Pro. So number one, we want the chart to be in a squeeze. Common sense, pretty simple. And we want these moving averages at the time that we enter to be stacked. You've got the blue, you've got the red, and you've got the pink. The blue is the 8 exponential. The red is the 21 exponential, and the pink is the 34. Okay, so far so good. All right, so whenever you enter into this squeeze, number one, you want those moving averages stacked. So if you're bullish, the 8 needs to be above the 21, 21 needs to be above the 34. All good so far. All right, well, here we go. So we entered into this black squeeze right in this area. Now, I want you to notice this line down here. So this indicator has several signals, but one of the signals is a bullish and a bearish divergence. We're going to combine the two. This little trick is going to explode your TTM squeeze trading. So the way it works is, you guys know, a bullish divergence is when price is going down, but the indicator that you're using is going up. So as price was going down on the TTM Squeeze Pro, the histogram was going down. There was no divergence. But if you look at this Forecast Pro, when this blue line comes in the lower zone and comes out, I have a whole bunch of videos on this, and then it comes down and goes back up, that means it's diverging. So as price is going down, the blue is starting to go up. Now, what's beautiful is, if you have the Forecast Pro, it's actually going to print that line for you. And if you have the upper study set, it's going to print that line on the chart. So the trick is, you're going to enter the squeeze when you have stacked moving averages and you get that beautiful bullish divergence on the Forecast Pro. So in this case, you would have entered right there, and look what happened. Bam, rocket ship, squeeze fire. All right, so now we're looking at gold. Let's alert our attention to this black squeeze. This is that low compression squeeze. So as gold was pulling back, the moving averages were stacked, and look at that line. Price went down. And again, let me point your attention. If you would have just been using the TTM squeeze histogram, it was converging. It wasn't diverging. It was going with it. But this indicator right here, to the Forecast Pro, it went down. The blue line, it went out. That's the trick. Back down, and boom. And it printed that line. It automatically prints it. So there was the divergence. And again, if you have the upper study set, it's going to print it on the chart. Went into the squeeze. You just had the divergence. You can enter anywhere in there. Let's go ahead and take a look at this one on the bearish side. So as you can see, we were in a downtrend. Now, we went into this beautiful squeeze. Now, this was interesting because this divergence extended. This is kind of a rare, which shows you there's even a lot more power behind the move, but that's for another discussion. So as you can see here, we were in a squeeze. Price was kind of chopping around, but it started to go up. You see that right there? Price was going up, This barely made it, but it drew this line for me because you can see that as price was going up, this indicator was starting to go down. The moving averages were stacked to the downside. Now, what's tricky is if you were just using the squeeze histogram, the momentum was going up. The momentum here was going down, so it leads the histogram itself. That's very powerful. And so right there, you can see here, went up, you could have entered, then it barely crossed, but you would have still been in the trade. The divergence extended. So you could have added to that trade and then rocket ship to the downside. All right, everybody, now we're going to look at Walgreens. What we want to start off with is we want to look at the trend of Walgreens. We got stacked moving averages to the downside. As you can see, we went into that squeeze. And if you're noticing this is happening lots of times when it's going from that green to the black, like right into that squeeze. So as you can see here, we went into a squeeze right here. You can see that the line printed. So the good thing about this is they're more powerful when the blue line goes in the upper zone and it comes out and back up, but it doesn't need to. We're playing the humps. And that's why having this indicator that draws it on the chart for you, it's so powerful. Because right here, you can see that the hump went up, went down, and went back up. Same with here. It went down, back up, and down. So the higher high, well, the highs were getting lower. The highs were getting lower, and price was getting higher. It drew that line for you. That's what's kind of hard to see. That's, again, it's so powerful that it draws it. But there you go. You had a nice bearish divergence in a downtrend stacked in a squeeze. So here's the deal, my friends. We're talking about an easy trick to simplify your effectiveness. So what you're going to do, number one, is you always want to make sure you have permission. Make sure you go watch some of the videos that I talk about because that trumps everything. But assuming you have permission to trade the squeeze, you're going to be looking for, if it's permission to the downside, stack moving averages to the downside, beautiful squeeze, and then the divergence on the Forecast Pro. You get that, you light it up. If it's bullish, same concept. You got to have permission, but then you're going to look for stack moving averages to the upside, pulling back into the squeeze, going into the bullish divergence on the Forecast Pro. You do that. That little trick will change the game, the way you trade the TTM squeeze. Does that make sense? If you implement what I shared with you in this video lesson today, it's going to make all the difference in your trade in the TTM squeeze. And right now, if you end up getting my Options Elite Masterclass, for those of you that are interested, I'm going to give you my TTM squeeze bonus course completely for free this month. All right, and also that indicator, the Forecast Pro that I used in this video, as a bonus this month as well. If you get my Option Elite, you're going to get that indicator for free. If you're interested, information is down below in the description. Hey, thanks for joining us in today's episode. If you found value in it, do me a favor, give me a thumbs up. It really does help support the channel. It lets YouTube know that this video was helpful to you, and it spreads it out to more people. Also, guys, hey, don't forget to subscribe to the network. We go live and post videos every single